From BlackRock's two-faced approach on climate change to investing considerable sums in companies that are destroying the world, these are all of BlackRock's darkest secrets.
What we really need is large equity investments moving away from BlackRock and other politicized firms.
Climate change is a financial risk.
Have any of you ever heard of the firm BlackRock? Well, it's one of the world's largest investment.
And we have to start with the firm's huge influence on the U.S. Due to their phenomenal reputation, the U.S. government contracted BlackRock to clean up the mess caused during the 2007-2008 financial crisis. And when coronavirus caused a similar economic disaster in 2020, this company was hired again to stabilize the financial market. Since the U.S. government became a BlackRock client, it used the firm's resources to access the financial data it needed. Within that period, the EU and Canada also hired the investment giant for the same purpose, due to which this deal gave BlackRock access to the top-secret financial data of these countries, which could be used for its benefit if it wants to. Analysts even say that Larry Fink exploited the 2008 crisis to build his business, which, judging by their huge figures today, I guess you'll agree. And this is why William Birdthistle, a professor at the Chicago-Kent College of Law, even told Bloomberg Businessweek that he thinks of the firm as the fourth branch of the government. Now that's a bold statement. But while BlackRock was involved in knowing the inner wranglings of the USA, it's also blamed for huge forest destruction in the world. The firm has huge sums in 25 deforestation risk companies that are indirectly responsible for the unending fires in the Amazon. As the world's largest rainforest burned, BlackRock reaped from the environmental destruction. In 2019, after wildfires swept through the Amazon, protesters even blocked the entrance to the company's headquarters as it was accused of funding companies responsible for destroying the Amazon, along with other natural forests. And in response, the firm's spokesperson revealed that it reached out to 5 Brazil-based agribusiness companies and assured that it would compel the companies to change. But the story doesn't end there, because the asset management giant is the largest investor in coal and also owns about 2.1 billion tons of thermal coal reserves, which is somehow creating a lot of problems. After The Guardian published an article accusing BlackRock of dragging its feet on the climate crisis, BlackRock contacted the media company to clarify its stance on climate change. The company revealed that it is considered to be an investment risk with the potential of affecting companies negatively in the long run. But critics have said that this approach is not financially stable, as the climate crisis could hurt many businesses by adjusting their models. Previous ones may be declared illegal, especially if there's a ban on petrol and diesel-powered cars or machines. And because of this, many fossil fuel companies will be forced to abandon oil on the ground and divest into other environmentally friendly options. And after years of battling criticism from environmentalists, BlackRock even announced that it would sell off $500 million in coal industry stakes and support environmentally sustainable companies. Even though this shows their concern toward the climate, critics still argue that this move shows weakness in its commitment to environmental issues, as they question as to why the company is not pushing for change in the commodities and agricultural sector as well, which is the second largest contributor to climate change. Because while BlackRock has announced a partial divestment from coal, the company has still remained mute about selling its investments in companies linked to the fires in the Amazon, like Archer Daniels Midland and Bunge Limited, till the day of this recording, and it also has yet to mandate these companies to revamp their operations. Instead, it only asks these companies to disclose environmental risks and costs. Wow, that helps BlackRock. But while the firm is one of the largest stock owners in the world, the company has still insisted that it has little ability to solve issues like climate change. And speaking about climate change, BlackRock was involved in another scandal as well, regarding a previous commitment to force companies to comply with international climate agreements, such as the Paris Agreement. 19 state attorney generals in the U.S. indicated that this commitment was aimed at increasing energy prices, driving inflation, and weakening U.S. national security, which obviously is bad. But that's not all, because while the world got carried away with Larry Fink's thirst for profit, nobody even noticed the company's terrifying actions towards its thousands of workers. BlackRock has already laid off human stock pickers and replaced them with robots. The money manager announced that they'll replace more than 40 jobs with computerized stock trading algorithms. And the justification simply was that investors want cheaper alternatives managed by computers. And replacing humans with machines lowers BlackRock's BlackRock's ratio of costs to profits by about 28%, which might also help them to dictate democratically elected governments since it dominates significant areas of the economy. But while the firm held its position as a force to reckon with in the U.S. market, BlackRock has desperately gobbled up many competitors over the years as well. It has purchased numerous legacy fintech startups in the hopes of being a unique traditional money manager. In 2009, it acquired Barclays Global Investors after gulping Merrill Lynch Investment Management earlier as well.
Because you're the acquirer here, Bob, we're going to have lots of time.
In 2019 and 20 as well, it bought eFront and Aperio for $1.3 billion and $1 billion respectively. The company has spent over $17.39 billion in 23 acquisitions across banking, tech, finance, accounting, and more. Till the day of this recording, BlackRock holds shares in almost all the biggest corporations in the world, due to which the firm's name is an unseen influence in many government policies as well, which explains why critics even say that the company owns the world. This firm owns an unbelievable magnitude of assets under management, and as of 2022, it holds $10 trillion. But while BlackRock seems to be easily dominating the world, that might stop, as BlackRock is going in the wrong direction after all. BlackRock's extreme controversies have forced the government to enter, which scrutinizes the company's actions. Critics have said that Fink's political ambitions forced him to dictate energy policy. Bluebell's chief investment officer, Giuseppe Bivona, even told the press that he suspected foul play after the company refused to prevent a Belgian chemical company from dumping soda ash into the Mediterranean. And BlackRock later revealed that they did not intervene because it was simply not in the best economic interest of its client. Along with this, BlackRock also got under heavy investigation by a group of state attorneys general over its push on ESG investments, promoting environmental, social, and governance issues. The team, led by Arizona AG Mark Brnovich, wrote to the Securities and Exchange Commission, SEC, to investigate the company's ties to China. They were curious to know if BlackRock performed its fiduciary responsibility to investors or was just paying lip service to it. They also suspect that the firm invests in Chinese companies that flout environmental laws, despite forcing U.S. companies to implement net zero carbon emissions. But why would BlackRock even go to this length to brandish such hypocrisy on the world? The letter also urged the SEC to examine the company's ties to various climate groups, as the Attorney General accused Fink of using their state's funds to invest in these highly profitable areas, in order to get a massive return on investment, along with a vote as well. They even hoped that the company would at least give a reasonable justification for their actions. But they fear that it might have used its net zero commitment just to woo investors. But despite being the first firm to reach $10 trillion worth of assets under management, BlackRock fell too hard as well. In 2022, it lost a mind-boggling $1.7 trillion worth of investors' money due to the combination of poor performance of stocks and bonds, as well as rising interest rates, recession, and inflation. But only a few firms can lose so much money and still survive, and BlackRock obviously is one of them, which shows how much power the company actually has. And because of this strong hold over the world, critics even say that Fink is gearing up to be the world's most influential man, which might not be the best thing to happen. His colleagues already dread him because of his power, and their anger towards him is understandably obvious. They cite his involvement with the 2008 financial crisis and his claims of stakeholder capitalism. Warren Buffett and company even seem to be unhappy with Fink, especially because he claimed to be a staunch opponent of big oil. And in reality, it might be these big oil companies who actually come to him to discuss climate change issues. Well, who knows? But the power BlackRock has gained by acquiring many companies is only half the story, as the other half is because of none other than Larry Fink himself. You'll be shocked to know how this CEO operates and makes cutthroat decisions almost every day. One time, he made a controversial move in the market, which resulted in almost putting a whole country in recession. Another time, Larry Fink made a huge decision, which ended up bankrupting the targeted company and thus crushing thousands of jobs and the livelihood of many people. But what are these big decisions he took? And more importantly, why? I know you want to know more about this, so just click the video right here.